Well, hey there, everyone. Welcome to our February Q&A session. We've got some great questions lined up for y'all today, so I'm super excited about this. So let me go ahead real fast, bear with me, and just pull up some things. As a reminder, if you ever have questions that you want answered on these Q&As, you can submit them by going to megkwheeler.com/Q&A. And I will make sure that those get a part of our upcoming Q&A sessions. If you have urgent questions that you need answered and you can't wait till our next Q&A, go ahead and post them in the Facebook group. That's the best place to get a more urgent answer. But if it's something that can wait, definitely submit it so that we can answer it on one of our Q&As and it'll go into the member vault for everyone to be able to benefit from. Now, we do have our hot seat coming up next week. Of course, as always, our hot seats are the third week of the month. So just a reminder to sign up for one of those hot seats by going to megkwheeler.com/hot seat. If you haven't seen a hot seat before or haven't been a part of one, definitely check out prior hot seats. I know sometimes it can be kind of scary to talk about the money stuff, but I think if you watch these hot seats, you'll see that they're really helpful. It's really a great opportunity for us to work through whatever challenge you're having in your business. It doesn't have to be related to the month's theme. So this month's theme is what's deductible and tax deduction. So we can definitely talk about taxes if you want, but it doesn't have to be related to taxes. Last month, we were talking about getting a loan for your business or bringing on investors and possibly expanding and what that looks like. So definitely sign up for a hot seat by going to megkwheeler.com/hot seat. And of course, we'll do that next week. So, all right, I want to go ahead and bring up our questions here. Bear with me just a second because we've got a couple of great questions, but sorry, bear with me. Okay, because for some reason our questions are not over here on my little thing, so I want to make sure I get them up here. We've got some great questions today, all about tax deductions. I want to be just super clear for anyone who maybe is watching this on replay. We're recording this in February of 2021. My answers to these questions are going to be based off of the tax laws for 2020 and 2021. So I'll let you know if anything's changed. Nothing's really changed for 2021 with respect to these questions. And actually, just kind of generally speaking, we didn't have any big tax laws, tax bills get passed or anything like that in 2020 that would take place in 2021. I shouldn't say that. We didn't have any solely big tax bills. We did, however, have a lot of COVID relief bills passed. And those definitely changed some tax things, but none of these questions relate to that. So we're not going to get into that today. Okay, so our first question up here is, I just redid my office. Exciting. And I bought a coffee maker. Can I deduct this as a business expense? This is a great question. You'd be surprised how often something like this comes up because it's those little things that actually end up tripping people up. It's it's an expense that you bought it for your office. So, you're going to use it for your work, but then I am guessing you're thinking, well, that kind of feels like a personal expense, right? So here's the long and short of it. If you buy something like a coffee maker, the same could be said for a microwave or I'm trying to think like what other, or a sparkling water dispenser type thing. If you buy a coffee maker that is in your office, it's put in your office. Now that can be your home office. You didn't specify if this is an office out of your home or not. And that's okay. You didn't have to, it doesn't matter, but it's put in your office and it's solely for business use. And it's something that is there for the convenience of the employer, then it's 100% tax deductible. Now, you might be saying, well, does it count as 100% convenience for the employer if I'm the employer and the employee, like you're the only person in your business, basically? And the answer is yes. When we say for the convenience of the employer, what we're saying is it's something that they are putting into the workplace to make things easier for the people who do the work, which can be you or anyone else. And that basically allows the employer to get more out of the worker. That sounds bad, but that's basically what it is. And essentially, it's called a fringe benefit. Now, some fringe benefits like health insurance or retirement contributions have lots of tax rules around them, but other fringe benefits like a coffee maker, not a big deal. So yes, it's 100% deductible. Again, as long as it's solely for your business, 100% deductible. And you can just classify that as like office supplies or, or whatnot. And by the way, the same thing goes for the coffee. So because I'm assuming you're going to be buying coffee to go in this coffee maker and maybe cream and sugar or whatever. Same thing. It's got to be used 100% for business. So it can only be used when you're down working in your business. You can't decide you want a cup of coffee on a Saturday night when you're not doing work and go down there and use it. It's got to be 100% used for your business. But yes, you can deduct it. So great question. Okay, next question. I hosted an event in 2020 and had the food catered. This was pre-COVID. Yep, get that. Can I deduct the food? I'm a little confused about the for the convenience of the employer rule, which is what we just talked about. But actually, the for the convenience of the employer rule isn't going to be the rule that we apply here. Again, for the convenience of the employer is when the employer provides something, because not providing it would mean that their employees would then have to do something that would detract from the productivity of the work. So the coffee maker, for example, by having a coffee maker in the office, employees don't have to go out to get their coffee. That saves time. They can do more work in the office. Another example would be providing dinner. If my husband's an attorney and many nights he'll work late at the office, or he did pre-COVID. So his firm will buy him dinner when I think they've got to work till like 8 o'clock or 9 o'clock, whatever it is. But when you work that late, his firm will buy him dinner. They're doing that for their own convenience, because if he had to go buy himself dinner, then that would be a half hour or an hour that he would leave the office and wouldn't be working for them, and potentially would even say, forget it, I'm not going to stay. I'm going to go home because I can't afford or don't want or whatever to eat out. And so I'm going to go home, make myself dinner and work from home. And the employer says, well, we'd rather you work at the office. So for our own convenience, we're going to provide you with dinner. So those would be for the convenience of the employer things. In your case, different rules apply. So my first question to you would be, well, what was the event for? And I'll kind of go through the options since you're not here live. I see a couple of folks here live, but if you are here, whoever asked this question, please let me know. So what would be the rules? Well, the first situation would be if you hosted an event that was for your employees. So like a holiday party or an employee appreciation party. If that's the case, and if more than 50% of the employees are invited, and it's not just a party for the highly compensated employees, that's like an official IRS term, by the way. I'm not going to go into exactly what it means, but you can imagine what highly compensated employees means. So as long as it's for at least 50% of the employees of the company and it's not solely for the highly compensated employees, then you can deduct 100% of the food for that employee appreciation party or holiday party or whatever it is. The reasoning behind that is they don't want the owners to be allowed to just throw themselves a big party and deduct it 100%. That's the first one. The second one is if you're hosting a party or an event that is open to the public. So there are no limitations on who can come. I mean, there might be some in terms of like capacity, but you're not saying this is only for clients or it's only for employees. You're hosting an event for the public. An example might be if I own a retail store and I decide to have an open house or like a grand opening party, and I decide to have food at the grand opening party. There's no limitation on who can come in the store. I mean, again, you probably can't fit 1,000 people in, but any person on their own could come into the store, right? So in that case, again, 100% deductible because it's open to the general public. It's basically for marketing purposes, if you will, but you're still going to code it as meals. The third example is if you host an event for clients or customers, like let's just say a conference, or like a retreat or something like that, and the cost of the food is essentially included in their ticket. Or let me put it another way: when you sold them their ticket, you included meals as part of the benefits or features of the event. So if I host a conference and I say, we're going to get lunch for all the conference attendees so that we can go through, that's a part of our schedule, then that is 100% deductible as well. The same thing would be if I host a retreat and the retreat fee is $5,000, and that includes lodging and it includes meals. And I say as part of your $5,000 payment, we're going to provide you with lodging and meals. That's 100% deductible. So in those cases, totally fine. Where it wouldn't be 100% deductible is if, let me think of an example. If you, let's say you host like a 1-day work session with clients, folks, whatever, right? Everybody comes to that. And you build in a break for lunch. Well, let's say you build in that break for lunch and maybe you have 10 attendees and you say, hey, why don't we all go out to lunch? Like, Alex, that sounds fun. Instead of all grabbing our food separately, let's all go out to lunch. And you all go to the same restaurant, and you as the business owner pick up the tab and pay for lunch, right? That is not technically 100% deductible. It's a meal with a clients, and it would be subject to the 50%. So, and the reason there is because, and it would be the same thing, by the way, if you traveled. The travel is the one, or meals when you're traveling is one that always trips people up too. Like if I'm at a conference and I see a few of my clients there and I'm like, hey, let me take you out to dinner. Can I deduct that 100%? No, it's 50% deductible because you're, I'm trying to think how to explain this. Because the IRS doesn't want to give you a deduction for the food that you would otherwise have just bought for yourself because girls got to eat, right? So if you're going to have an event where you're going to treat everybody to lunch, for example, build it into the program, build it into the ticket costs. I'm not suggesting that when somebody signs up, you have to say like, ticket fee $500 and $50 for lunch. You don't need to break it out to the person. But when they sign up to pay, just make it super clear that lunch is included as part of their conference ticket. Okay, so hopefully that makes sense. All right, one more question. I have expenses in 2020 and 2021, but I haven't made any money yet. Are these deductible? Yeah, great question. So I'm going to refer you back to the section in the What's Deductible training on startup costs and organization costs. And just as a quick recap for everyone, these are two different types of categories. So any expenses that you incur for business before the business has actually started must fall into one of two categories to be deductible: startup costs or organization costs. Now, startup costs are expenses you incur as you're working to get the business up and running. So this could be anything from hiring consultants to help you figure out a business plan. It could be if you are posting for jobs before it could be things like that, like bringing on somebody to find people to work in the business. It could be if you're having like a market study done. It's anything that you have to do to figure out if you're going to do the business and to get it up and running. The second category, and by the way, I want to clarify that, but I'm going to come back to clarify that. So give me a hot second. The second category are organization costs. These are costs that you incur to actually legally form the business. So this would be hiring the attorney to set up your LLC. It would be hiring an accountant to get the S-Corp election. That would even be technically a business cost after you start usually. But if you get that paperwork in order before the business officially starts, then I suppose that'd be an organization cost. It could be hiring an accountant to advise you on the best tax structure. It's the fee you pay to the state to register the LLC or C Corp or whatever you decide to do. It's the register agent fee to get the business set up. It's all of those legal and or tax costs or accounting costs that you have to pay to legally organize the business. Now, with each of those categories, those costs have to be amortized over a period of 180 months. So when we say amortize, what we mean by that is you take the total cost, you divide it by 180 months, and that's the amount you can deduct every single month. With the exception of you can deduct up to $5,000 of startup costs and of organization costs each, so $10,000 total, in your first year of business, provided either one of those categories isn't higher than $50,000. If it's higher than $50,000, then that starts to phase out. However, notice how I said in the first year you start your business. So the big question becomes, well, when did I start my business? Now, for people like me, so I started my business in, when did I start? In 2018, but like near the tail end of the year. I started my business in 2018. I was officially trying to get people to pay me. Sorry, there's like snow falling off the roof of my house and it got really loud for a second. I was trying to get people to pay me money in the fall of 2018. So my business was officially started. I don't think I had very much revenue because I literally started in like November. I don't think I had very much revenue November or December, but I was out there. I was out there trying to get people to pay me money. So my business had started at that point. That's the question you have to ask yourself, because you said, I haven't made any money yet. So my question is, have you not made money just because you haven't made any money yet? You haven't gotten any clients, which, by the way, no shame. That's okay. We all go through it. Or have you not made money yet because you haven't technically started the business yet? Meaning you're doing all the legwork, you're getting everything set up. But if somebody knocked on your door right now and said, hey, I want to give you money, you're like, hold on, I'm not open for business yet. So which one is it? If it's the second one where you're like, I'm not open for business yet, then what you're going to do is you're not going to include that business on your tax return yet because it doesn't exist yet. What you're going to do is you're going to keep a list of all those expenses. And then in the year when that business starts, that is the year when you will either deduct or amortize those costs. So you said you have expenses in 2020 and 2021. My question for you is, in 2020, were you a business? Did your business exist? Now, I'm not talking about legal entity or anything like that. I'm talking about, did you as a person, a sole proprietor and or an LLC or whatever, did you exist as a business? Now, by the way, if you formed an LLC in 2021, you started a business. Because you wouldn't form an LLC and then like wait years to use it for your business. That just wouldn't make sense. So if you formed an LLC, most likely you started your business. But if you didn't form an LLC in 2020, and you were incurring these costs, the question then becomes, were you actually a business in 2020? If somebody had knocked on your door and wanted to work with you, were you open for business? Were you actively going out there trying to get people to give you money and you just didn't get any? And if that's the case, then those expenses, those startup costs and those organization costs before you started the business, you could deduct in 2020, and any costs after you started the business, of course you can deduct as normal business expenses. But if the case is that you really didn't start the business in 2020, I would ask the same question about 2021. Have you now started the business? And then if the answer is, yeah, I've started it now in 2021, then all those costs you had in 2020 that are startup costs and or organization costs, you're going to deduct in 2021 up to $5,000 each and then amortize the rest. And then, of course, any costs you incur after you started the business, those are regular operating costs of the business. Now, last thing I want to say about this is make sure with all those pre-business costs, you've got to make sure that they qualify for a tax deduction. Not every cost to start a business qualifies. And this is where you need to work with an accountant, or you need to just go to the IRS's website and kind of look at the guidance there and see, or feel free to post in the group and I can give you some more guidance. But that's what you have to do, is look at those and say, is this a cost that qualifies for the tax deduction? So it can be a little confusing. I have a client, in fact, right now, who she has costs from 2019 and 2020. I'm sorry, 2018, a little bit in 2018, 2019 and 2020. And she did not start her business until the end of 2020. So all of those startup costs from 2018 and 2019, she's going to deduct in 2020 because that's when her business started. Now, the last thing I will say is you got to be a little careful with that. There are some businesses that take 3 years, 5 years might be a stretch, but a few years to do that legwork before you can start them. I'm thinking like research heavy companies, or a location dependent company. Like if you're going to open a resort somewhere, that might take a couple years to find the right spot. But if you're starting an online service-based business, it shouldn't take you a couple of years to get that started. And so you gotta be careful about incurring all these, like if you're going out there and you're buying all these online courses, but you're not really trying to get income yet, then you got to be kind of careful about that, because at some point, if the IRS audits you, they may say, this feels more like a hobby. You were spending all this money on this education, but you weren't trying to make money. So that feels more like a hobby than a business. So I don't want to see you do this for multiple years, ideally, unless the type of business you're starting really does warrant it. That's sort of the last thing I would say. So I'm hoping that you can tell me that your business has started at least in 2021, if not in 2020, and that it's not going to be pushed out another year. And the last thing I want to say here is, this is the distinction you have to make, especially at the beginning, because a lot of times, the question really is, if you're not making money, is it because you haven't started the business yet? Or is it because it's the normal stuff at the beginning where you're trying to get clients and you just haven't yet, okay? And that's the distinction you have to make. And if it's the second, where you're trying to get clients, you just haven't yet, you've got to include your business on your tax return. You've got to, include those costs. Your business has started. But if it's the first, your business hasn't started yet, and you won't deduct those costs until it does. So hopefully that makes sense. Let me know if you have any follow-up questions on that. Put them in the Facebook group, or come back to next month's Q&A, and I'm happy to answer them. All right, folks, that was a combination of friends and folks. That was weird. That is all I have for today. So just a reminder, I'm going to pop it up here again. We have our hot seat next week. You can sign up for that by going to megkwheeler.com/hot seat, and I will see you all then. Bye for now.